Today I'll be showing you an easy option strategy that you can do on a stock that you think is going to drop. But before we get started, if you enjoy these types of videos, be sure to subscribe for more videos like this one. It's free and you can always change your mind. So for this one, I'll be showing you guys on Nike. This is just an example. I won't copy this exact trade. I'm just going to show you how to set up a trade just on any stock. But for this one, I'll be showing you on Nike. So let's say that we were looking at Nike recently and we saw this drop right here, and we believe it's going to continue dropping because of, let's say, some news that we heard about Nike, and we think it's going to continue to drop. So we're going to come over here to trade Nike options. And then, so we're going to, first things first, is this is just a two-piece option strategy. So we're going to sell a put. For this example, like I said, I think Nike is going to start dropping immediately. So I'm going to sell put just right under the actual share price. And then, so you'll see something like this in the next part, and we're going to buy a put, and we're going to buy it one above. This is called a put debit spread. You'll know it's correct when you see put debit spread right there. You don't have to buy it one above. You can put a gap in between it to make more profits, but your max loss is also increasing. So that really depends on how you want to play that through. So you see 127 now, but max loss is 173. And then you can see the closer we get, the closer we skew it together, max profit is $54 and the max loss is 46 right there. So let's just say I'll put it, with one in between just to get some extra profits in there. And let's say that $89 isn't enough for you, but you don't want to spread it apart anymore. So we'll come over here and click continue, and then each contract is basically just a multiplier of your max profit and your max loss numbers. So if we switch this to number 2, we'll see it multiplies both these two numbers by 2. So now your max profit is 178 and your max loss is $222. You can switch to 3. Max profit 267, max loss 333. So even if Nike stays at its current price or rises up to about 115.89, that will be in the green or at 0. So like I said, you're going to want to do this if you think Nike's going to drop or whatever stock you choose to do this on. So just be looking out for news, and you hear some news and you think a stock is going to drop a little bit, maybe put this in. Obviously the safer option is to just do one contract. So you can see it'll be like that. And then so what you're going to do is you're going to see your max cost is $111. You're going to click review order, and then I don't have enough buying power right now. My money's in other places, so all you'd have to do is just have your max cost just to support this buying power. And so yeah, you'd put that in and you should be good to go. Okay, so we're going to come over here on the option strat to visualize this just a little bit better. You're going to come over here to build. You're going to look under debit spreads, and you're going to see bear put spread. Because it's a bearish option strategy, we think the stock is going to go down. So all we're going to do is going to copy. Oh, and by the way, I didn't mention this earlier, but I set the expiration date just about 4 days away, so that way I don't give Nike much time to climb back up, just so that it'll continue to drop a little bit, and then I can just secure the profits. So this expiration date is 4 days away from when I'm recording this right now. So first things first, we're going to come over here. Like I said, click on build, click on bear put spread, and then put in your ticker symbol. We chose Nike for the example, so we'll put in Nike. First things first, make sure the expiration date is correct. It is. And then all we do is just copy this two-piece right here with these red numbers. So sell is on the bottom, so we're going to sell the 115 put. It's already there. And then we're going to buy the 117 put. So we just move this to 117. There we go. And so looking at this, you can obviously see that you can visualize everything much better than what Robinhood shows you. So that's why I like to go over to option strat to visualize this a little bit better. You can see where the price has to be on this left side right here, where the share price has to be of the stock for your profits on each time of the days of the week. You can also play around with the chart range if you want to see how that changes things. It'll obviously move the price on the left side here. You can also play around with the implied volatility, but for right now we'll just leave it at what it is currently. So if you have any other further questions, be sure to comment those down below. Like I said, I always recommend coming over to option strat and just to visualize everything a little bit better. But if you enjoy these type of videos, be sure to subscribe for more ones like this and check out my channel for other option strategies. And yeah, thank you guys for watching.